Hello and welcome to episode 30 of Long Shots, our weekly podcast. And we'll start today with a fun fact. Did you know, Sharad, which is the most viewed free-to-air channel?
Yeah, I'm forgetting the name. Some Dana, no, what's it called?
Dangal, man.
Dangal, yeah.
Dangal. That is the most watched channel on television in India. I think it was, that tally came out on the last week of March. It beat Star Sports Hindi even during IPL season.
Yeah, what's the number one? But overall, it's Sun TV, right?
Sun TV used to be
before
number one. Now it's number 3.
I know a lot of people who, I think they own Sun stock, emerging market portfolio managers.
All right.
And Z.
I did not know it was a listed company.
Yeah, maybe there's some other holding company that owns Sun, but they had exposure to Sun.
Yeah.
That I know.
Yeah. I mean, it's interesting because I think this is also a result of the new tariff structure.
Yeah.
And apparently a lot of free-to-air channels have dropped out and they have kind of gone behind a paywall, quote-unquote now. Kind of shows there's a slight bit of margin pressure which is creeping in post the TRAI tariff order. I don't know. Maybe it's too early to comment.
Yeah, look, generally, but sort of there have been instances where margins have actually gone up because of channel unbundling.
Yeah.
So it has had reverse effect in other geographies where it's happened.
My monthly spend has dropped by 50%, my friend.
Yeah.
That was realized only yesterday.
Yeah.
But I don't know. Maybe some channels might like channels which I think are non-essential might turn out to be essential in a few days.
Yeah.
And the amount might go up. But yeah, it's pretty much about optimization of your own mix, right?
Yeah, no, from a revenue perspective, yes, of course, unbundling will do that. But the amount they pay, the subsidies, the big channels, the way big channels subsidize the small channels,
right?
That will hurt the small channels so much more.
Yeah.
And you can see a lot of channels disappear, I'm pretty sure.
That's correct. Well, did you notice that today was a slightly different note by which we started the podcast? There was no friendly reminder on subscribing to our channel. So I think now it's about time that I should do that, right? So yes, definitely.
People already are subscribed.
What about the quote unquote new users? Who discover this gem in the podcast ecosystem? So yeah, I would advise any new user.
So what are the house rules then?
The house rules are the same, yeah. So we are now streaming on various podcast apps, including Spotify, Google Podcast, iTunes, and my personal favorite Deezer, about which nobody knows. But yeah, do subscribe to our channel so that you get that nice little notification every time an episode goes live. And with that now behind us and a bit of a starting discussion already, now maybe we can narrow it down to things which are closer home.
Yeah.
Ola, right? Ola's expansion plans I think came back into the spotlight this week with them potentially entering Dubai now. I think they're already present in Australia, New Zealand, and the UK.
Yeah.
And I think Dubai is next step or next new market for them to enter. What are your initial thoughts? Slightly, I would say, Ola that way is probably unique within the Indian startup ecosystem in the sense that international expansion seems to play a fairly central role in their growth. But yeah, what do you say to that?
Yeah, no, you're right. It is unique in that context, and I think last year they tried to go diversify their business and getting into food panda and food delivery and all that whatnot. But they sort of now understand international growth has been their core priority. Right. So it's a fourth international market, like you said, and Dubai has one of the highest digital literacy as a profile.
Right.
Big ticket sizes are expected.
Right.
And no wonder Uber's already there. And they've just recently remember we talked about how they bought out this company called Careem, which is also a ride-hailing company, for 3.1 billion.
Right.
So clearly a market that interests ride-hailing companies. So it's going to be a duopoly, I guess. I don't know if there are other players, but Uber/Careem versus Ola.
Yeah.
And I think it's very evident that Ola wants to sort of expand their growth and drive top line growth in international geography
Right.
rather than diversification. Let's see how that plays out.
While remaining in their core business.
While remaining in the core business and continue to invest in the business, and so much so that they turned down 1.1 billion of investment from SoftBank due to other reasons, which we'll talk about later. But what do you think about? I know you look at the Indian startup space as well, and we've always talked. I think even on podcast we've talked about how chasing growth at all cost and unit economics and things like that. But what are your views on this international growth sort of narrative?
I mean, I kind of think that this is, in a way, this is basically playing on your strength. I mean, you are into the ride-hailing business, and you're sticking your guns in that sector, and you are chasing better margins, better economics outside India. So I mean, I think it's a very smart and logical way to look at things. I mean, I genuinely tried. I mean, I do get a bit uncomfortable when a lot of startups, acquire companies into completely unrelated domains, hoping to grab some sort of a new, share of the pie, which they were not even targeting in the first place. Things like that come into mind is obviously companies like maybe Swiggy, which kind of diversifies away from food delivery into other domains, be it medicine delivery, be it, but I mean, at the end of the day, I think there is a fair bit of merit in sticking to what the model that you already know very well.
I agree. And
I think Zomato kind of did a similar thing. I mean, they, instead of, moving out of food discovery or focusing on other verticals, they ventured outside. They kind of expanded to Jakarta. They went to Middle East. They went into London, which didn't really, I think, work out very well.
Australia as well, I think.
So I mean, they acquired a company in the US, which again, I mean, you can kind of look at it both ways, but I kind of feel that is a more sensible way to go about it. And secondly, it kind of diversifies you away from focusing too much on India, because I mean, let's face it, India, I mean, obviously is a big market, 300, 400 million, that's the number that is always thrown when we're talking about India. But, in terms of unit economics, India is still a fairly challenging environment. So no harm in, putting your leg into other geographies where you can crack this model.
And it's a chase for growth, right? I mean, either diversify or expand internationally, and everyone's chasing growth.
That's correct. I mean, even Ola did it, right? I mean, Ola kind of also diverted into Food Panda, as you said. But I
that
think
didn't work out too well.
I think now they are kind of retrenching away from that, going back to their
roots or core.
To their roots. I mean, Uber has done the same with Uber Eats, but I think Uber Eats still has a fairly major. I mean, they still have a major exposure to Uber Eats, especially outside India.
And even sort of, I was reading, I think with their deal with Swiggy, sort of like not entirely closed, or there are some question marks now.
I think there are. I think you're right. I'm not very up to date on that point.
Neither. I just remember seeing that, and like you said, Food Panda, they put in 200. They allocated 200 million, Ola, I think, towards Food Panda.
Right.
And then I don't know if they've completely reversed it or you actually burnt it. I don't know. But obviously the focus has shifted.
I mean, as we always say, transporting a human being is different from transporting food or transporting medicines or getting into logistics. I mean, they're just different businesses. So it doesn't really always translate if you get into a new direction. But I mean, Ola has had its fair share of problems. Obviously, a very, very aggressive price competition with Uber within the Indian ecosystem. I remember, it was, I think, sometime in 2017 when they were saying that we expect to get profitable by FY19. FY19 has passed by. I mean, even though I think from a unit economics perspective, they are kind of in the green, but at an operating level, they are still a loss-making company. So they are obviously feeling that pain as well. But I guess this way of actually diversifying outside, going towards bigger wallet shares, is a way that they see might be a sensible approach for the future. And let's see where it kind of takes them. I mean, interestingly, they are also into. I was recently discovered that they actually. It's not that they they are kind of getting into financial services as well. Like they have a leasing business. So I think to date they were tying up with NBFCs, but I think now they are trying to get their own NBFC license. I think we talked about that
Yeah, we
briefly
did.
once.
And it's a very interesting subject nonetheless.
Correct. So I mean, they are into ride hailing. They are into financing of cars for ride hailing. That also I kind of see it. I think they're now also into electric mobility. I think they have a electric mobility oriented business as well.
Yeah.
Which is kind of going in its pilot phase. So yeah, that overall is a nice mix in my head.
Yeah.
You know, it kind of is complementing each other, which is good.
Yeah, and one thing that we briefly talked about was what do you feel about projecting 1.1 billion from SoftBank because of control issues and getting diluted out of it as the founder? It's a good move, I guess.
I think it's a very relevant issue in any case because, you know, I think, wasn't it only last week when we were discussing about, differential voting rights?
Yeah.
And I think, Indian entrepreneurs have been kind of stuck on the wrong side of the stick in that regard because there is no dual voting class shares.
We have a piece on our website recently written by a lawyer.
That's correct.
We should probably put that in the put that link
in the description. Yeah, for sure. That's a good one. That's a good idea. So yeah, we can do that. But I mean, at the end of the day, ownership and control within the startup ecosystem has always been challenged in India because founders generally don't have that kind of legal framework at hand, which gives them. For instance, in case of Facebook, Mark Zuckerberg, still pretty much owns the board. You know, he has. He has ensured that the overall
control
share structure is such that his shares are worth just more votes, in a very layman term. And I think that's slowly changing in the Indian context as well, but it's always refreshing to see, a major unicorn founder keeping that point central to his premise while dealing with an existing investor.
Yeah, so it's good. I take it very positively as well.
Yeah.
Let's see. And let's continue to see how Ola evolves and does well or not in international markets. Obviously, it's heavily competitive even in the Indian ecosystem.
Yeah.
But good. I like the fact that there is international growth narratives coming out of the Indian ecosystem.
And probably, Sachin Bansal being an investor on Ola, that gives Ola a lot more confidence also in terms of approaching other investors.
Yeah, and also what not to do and what to do, I guess.
Yeah, obviously, Mr. Bansal has first-hand experience of that game. So, because I think Ola is also probably in talks with the Chinese ride-hailing major Didi Jaksing, right,
correct.
for a potential investment. So, they're already diversifying beyond SoftBank because, I think they are, I think, all realizing that SoftBank is not going anywhere. Right.
Yeah.
The market is just too lucrative or too big to just let it go. So one does have a certain bit of leverage now that they are at a certain scale.
Yeah. And talked about Ola, one of the successful unicorn startups. Let's spend some time talking about Paytm,
right?
And see how they are evolving and moving from. Sort of strengthening their presence from online to offline.
That's correct.
Or O2O, as they say.
That's correct.
And Reliance obviously is a piece.
The biggest unicorn in our country, Reliance Industries.
The biggest unicorn. Conglomerate unicorn.
Right.
But what is their core business? I don't know. Do they have one core or multiple cores? Anyway,
they don't face the problems which lesser mortals like Ola would face. Right? They can get their hands into everything.
That's true. And I think there's a common theme between what Paytm and Reliance are trying to do is sort of strengthening their offline presence in the retail space. Paytm obviously done that on the digital time with Paytm Mall and whatnot. I don't know. It's probably too early to say it hasn't done well or not, but it's not a game changer on a positive side yet. And they're really, really pushing on the offline space now. They started hiring people. I remember reading a comment where they say they expect to do 10,000 crore business in the next 12 months.
Okay.
That's a big number.
Yes.
And it's, sort of hyper-local grocery and fresh produce are sort of the way they're trying to get into. Just basically strengthening their offline presence.
I think it's another case of where a fast-moving economy like India is basically taking big leaps in the market. For instance, like we keep on discussing how India moved directly from to mobile first, right? I think it kind of skipped a generation there in the same way, like for instance in e-commerce, after Amazon is literally monopolized online in US, they acquired Whole Foods, right? They entered offline because offline in terms of overall size is massive, right? And I think in India that trajectory has come very early. Like already e-commerce players, in spite of the fact that the e-commerce sector itself is so nascent, already players are, kind of thinking of linkages with the offline world. And I think we are a very unique kind of scenario because majority retail is still informal.
Yeah.
Right? There are like a lot of those...
the big chain retailers have 10% market share.
That's correct,
Mom
right?
and pop control the other 90%.
So mom and pop stores or kirana stores or whatever you want to call it, they are a very important political constituency as well.
True.
So like the FDI rules, no wonder are not allowing anyone to enter organized retail from an overseas perspective. It kind of and to add to that, the overall, there is already a big offline ecosystem there.
Correct. Yeah.
Right. So I think that's what like someone like Reliance is trying to do, right?
Yeah. Just onboard those guys and.
Yeah. So they don't need to. I think what they probably. I don't really know what their business plan is, obviously.
Yeah.
But what I kind of envisage is that the entire logistics and backend infra is already there. You have those stores. You have mom and pop stores. You have their storage. You have their backend already linked up. You basically give them that end-to-end online linkage to the user.
Yeah, and they in fact even bought a company called Haptic Infotech for $100 million,
right?
Dollars, 100 million US,
right?
Which does exactly what you are saying. It sort of provides customer support and logistics and chat support, and basically digitizes their entire offline presence.
Correct.
So yeah, you're right, and sort of now all of a sudden you'll find them competing with the Amazons and Flipkarts of the world, right?
Correct. Because especially like in where if you look at infrastructure, if you to be a successful e-commerce player, you need what? You need infrastructure, you need logistics, you need cheaper delivery costs. Correct. That infrastructure gap is there here. So one way is that you wait for those linkages to come organically, and the second is you hustle your way out. This is a hustling approach. Right. So yeah, I like it. I like the sound of it, and I think it's again a very Indian solution.
Yeah.
To a kind of more broader problem at hand.
Yeah, and even Paytm is covering ground like similar. Like they are going slightly different way. I don't know again what their strategy, how it will unfold, but they've already signed partnerships with like Chroma, Big Bazaar, and things like that, who are already present in the offline space. They're sort of partnering with them and trying to scratch that surface.
Right.
And Reliance obviously seems to be just digitizing offline guys, just onboarding them in bulk and sort of stepping it up. And it's going to be an accelerated process. Like I think it will happen really quickly. It might not have such a big tail as such to just get them up and running.
Right.
And then and it's funny, like even like my local grocery guy or department store in my neighborhood, I send him a WhatsApp message and he delivers stuff, right? Even everyone's trying to get to some form of digital place.
Correct.
And they're good, like they come within half an hour. So if Amazon promises me 2 hours, well, I have a guy who like basic stuff like grocery stuff,
and probably they give you some sort of a credit line as well informally, right?
Yeah, you can just say like I'll pay you later, I don't change or something like that, right? It is it's being there. You are seeing mom and pop guys also sort of climb that ladder of digitizing, and Reliance will obviously accelerate it.
Right. So it's very interesting that way, right? Where e-commerce is heading, right? Like in the US setting, e-commerce started with one player kind of grabbing pretty much the entire market share. You already had organized retail on the side, and now the next step was probably some sort of an online to offline linkage plus boutique e-commerce platforms coming up, which kind of focuses on one vertical.
Yeah.
And within the Indian context, like we are not even there in terms of one or two players actually monopolizing the entire e-commerce domain.
Yeah.
Already those other kind of structures are coming into play, right? Online to offline is there. There are now so many companies who are focusing only on one vertical of e-commerce as well.
Yeah.
So I kind of sometimes think that when will the major guys start making money out of this? That now that it's getting so crowded already, But yeah, that's I
And
think
another last closing note on this Reliance retail thing was I remember reading a line where they said that they want to establish a fully immersive shopping experience. So they're going big on augmented reality and
Right.
what's it called? What are the other buzzwords? Virtual reality and things like that.
you seem so cynical even while saying it, right?
Yeah, because these are like standard
thrown everywhere, right?
everywhere, right? Virtual reality, blockchain,
Yes.
big data. Like sure, do it, and I'm sure there's a market for everything. But yeah, I know. So they're also.
I do look forward to wearing my AR glasses next time I go to a mom and pop store, right?
Yeah.
That would always be a funny side.
Yeah, imagine like why do you need VR or AR for buying toothpaste? Let's call it whatever it is.
I mean, wasn't it Amazon which had come up with the Fire phone? That's exactly what they kind of claim to do. Like you actually have the phone and you take a picture or whatever, you take a scan of the product that you have in front of you, and it will tell you its price. It will tell you other stats on screen or something like that.
Yeah.
So it was like an augmented reality kind of a premise.
Yeah.
I think it was a flop. The product itself was a flop because I think the problem is that
Flop.
I mean it was I don't think I've heard of that product anymore. But I mean the idea being, I just think it's very sad if you go offline to brick and mortar store, but you are still very quote unquote immersed.
Yeah, I agree. It's I agree 100%, and that's why you heard that cynical undertone earlier, I guess. Yeah, no, we'll see how. Like, listen, I'm all up for tech. I know you are as well, but there are a few things which I just want to people use it, say it.
Yeah.
I don't you know what? Let's try it out before making a comment. Like, let's not just get all excited because there's a augmented reality.
Right.
I mean, it's a mom and pop store for crying out loud. You go there to buy like stuff which you probably need like toothpaste and brush and stuff like that.
Yeah.
I really don't need augmented reality there. I don't even need an immersive experience. I have basic conversation and paying off the counter, even if electronically or cash. I don't care. I'm happy. But anyway, I'm sure there's some value add for someone, and that's good enough. But
I mean, I think that's what happens with in the tech world so often, right? That there's some new thing which comes, and then everybody talks about it, and then when the product comes out, it doesn't work. Then it kind of falls back, and then 20 years later, when the entire ecosystem has caught up, then that new thing really comes as a commercial viable thing.
And then there'll be one person whose company probably went down under or something, and they'll say like, we were at the wrong timing. Our timing wasn't correct.
That's correct.
Yeah. But anyway, we are being too nasty right now. But anyway, let's see. But talking about Reliance, shopping is just one of the things that they're touching on.
Yeah.
They're also going creating. You've been in London for a fair bit of time. Is it what, Canary Wharf, which is sort of cyber hub look-alike in the London version? Is that a fair comparison?
Yeah, I mean, it's kind of like so London has the old financial district, which is like called the city, right? And then I think in the 80s, they redeveloped the port area in London, the Docklands, as they say, which, so they kind of did a lot of land refilling. They, changed the land usage rules extensively. They created investment vehicles, and that kind of emerged as Canary Wharf, which is the new financial district.
Yeah,
it's a very small space. It's like 40 hectares, but obviously it's economically one of the major growth centers of the British economy till the time it survives. Anyways, so having said that, I think the main reason why we brought up Canary Wharf suddenly is that we both, I think, chanced upon a story from Bloomberg which said that India needs its own Canary Wharf, which was supremely timed with the Reliance executing some sort of an MAU with the Navi Mumbai SEZ.
NMSEZ.
Yeah. So I think the main idea here is that in Navi Mumbai, which is the eastern water-facing part of Bombay.
I have no clue about Bombay.
I have also no clue. I checked it on Google Maps right now. So
okay.
It's I think like obviously like the main island of Bombay is pretty narrow, right?
Yeah.
So it's on the eastern end. There is more kind of scope for expansion.
Yeah.
So that's where Navi Mumbai is. It's pretty much. I think for the last 15-20 years, that's the part where a lot of people.
So it's got commercial.
I think so, yeah. So, but this particular thing is like this is a special economic zone which is developing along the port area in Navi Mumbai. It's apparently almost 4,000 acres in size. So it's massive if you see, if you kind of compare it to city of London to Canary Wharf, to the main commercial areas in Pearl River Delta in China. So it's much bigger, and Reliance is basically executing that project. So they have created a new entity, which is like this infrastructure company, and they executed a MOU with the SEZ. I think they paid like a lease amount of like 2,100 crores or something.
Okay.
And they are going to develop it, and it will be like, commercial, mixed use, linkages to airport, sea. I mean, it sounds very good.
Yeah.
I think
urbanization, right? I mean, modernization and urbanization.
I mean, I think anyways, Mumbai is a prime example of urban development having gone wrong, right? And I mean,
today's podcast is so nasty towards everyone.
No, I mean,
no, but I like it.
But I mean, it is, right? I mean, they have rent control, right, which has screwed up the entire skyline.
Yeah.
And it is the financial commercial hub of the country, right? So I think
it still hasn't tackled rain, has it?
I don't know, man. I mean, like, the problem is that like we are sitting in Delhi and we are making those comments. So
I know.
I'm pretty sure that. But I mean, what I find, just to finish that point, what I find very annoying about Mumbai is that it's a city on the verge of breakdown, and still everybody talks about it in such a nostalgic, romanticized manner.
Yeah.
Like, it's like, look at us, we managed in spite of being in such a, kind of deteriorated, on the verge of breakdown kind of a place, which I find fairly annoying. Anyways,
maybe this will change.
Maybe this will change it, right? So, but the broader point being that India's largest unicorn, RIL, can now do anything.
And what they're expecting, you can attract 75 billion in investments again, I think, for this project. So
I'm sure, they'll be
unicorn doing well.
They won't have much of a problem,
Yeah, no, I'm looking like that. We are obviously we have our own views and things like that, but I think both of us are sort of pro development, and we obviously like capex going up towards infrastructure, towards whatever it is. It's a good sign. Let credit go, let credit flow in, let the market sort of get stimulated and economic growth take place in whatever form. I think we're all pro that.
Yes.
But we also like to wear the cynical hat sometimes when we see things.
I mean, the good thing is that I think with the RIL, if you look at they are very good in executing projects.
There are no government obstacles, right?
There are no government obstacles, quote unquote, right? Plus, I mean, they are. I mean, let's face it. I mean, when it comes to operationalization of big industrial projects, I mean, they are very, very good. I mean, like, if you look at the Jamnagar refinery, the largest oil refinery in the world, I mean, that is a state-of-the-art project which was executed like clockwork. Yeah. So, and as you said, there is usually, government interference just goes away when they are involved, which I think in the broad scheme of things is a good thing. You might as well have a good SEZ rather than, complain too much about, it's, even if a bit of things go from here and there, I mean, it's peanuts, right? Yeah. $75 billion of investment after all. It doesn't really matter, right? So I think what was that book? It was Billionaire Raj, right?
Yeah.
Which kind of said that it's like in India. I mean, like in India or in the developing world or probably everywhere, like when it comes to huge amounts of money being invested, a bit of skimming off is okay till something gets done. So I'm also of that mindset. I feel that's fine.
As long as the net output is positive,
it's fine. It's fine. I mean, it's okay. Yeah.
Good. So, today's was a very interesting podcast. One that I'll remember. We started with a young unicorn. We're ending with India's biggest unicorn.
India's biggest unicorn.
We've been cynical. We've been optimistic. We've had both. We've flirted with both sides of the spectrum.
Yes. I know. I think it was a fairly reasonable summary of things. But obviously, I would invite all our listeners that if they feel strongly in favor or against to whatever we have said, so do feel free to share your views, via your comments on the podcast or, via email or any other thing that you find easy at hand. And with that, I think we can call it a day. And it was a pleasure to do this podcast this week. This is Nikhil Arora.
And this is Charlotte Tupran.
Signing off.